Welcome back to Living 808. The financial landscape is something that's constantly changing, and one of the areas that's seen as substantial amount of change in recent history is the availability of alternative financing like crowdfunding or peer-to-peer lending. But what do these types of financing really mean, and how do they differ from more traditional financing? Here today to shed a little light on the traditional versus alternative debate, as well as clearing up possible misconceptions for both options, is Rod Cachola from Hawaii USA Federal Credit Union. Thank you for being here. Appreciate it.
Thank you, John, for having me.
So a lot of us probably, there may be a lot of us that know about crowdfunding, things like GoFundMe or Kickstarter, but peer-to-peer stuff is not all that familiar for a lot of people. And I'll just throw out a couple names like, let's say, LendingTree. They've become more common. I know that those have become more common. But before we get into if they work or if they don't work for you, can you at least explain some of those to us?
Sure. I mean, if you want to talk about crowdfunding, yeah, most people, they don't know crowdfunding. I ask my coworkers, like, you know what crowdfunding is? And they're like, no. But as soon as I say, oh, have you heard of GoFundMe, Kickstarter? Oh, yeah, I know what that is. So, I mean, traditionally, GoFundMe campaigns, they're there to help people dealing with difficult times, right? But basically, crowdfunding is a way where people can collect funds to help finance ventures, projects, trips, anything. I had friends that, you know, who use GoFundMe and Kickstarter to help fund a local improv festival here, plug. But yeah, I mean, it's such a great way to gather funds without having to go out. Like, you know, I don't know, back in the days, to sell shitty tickets and all that, this would have been like so awesome back, you know, growing up. But yeah, I mean, so that's crowdfunding basically. In regards to peer-to-peer lending, it's a method of debt financing where someone can borrow or even lend money without the use of going through the traditional banks and credit union systems. So borrowers can get loans from individual investors who are willing to lend their own money for a contracted interest rate.
Is that why some of these are so attractive to individuals? Can you tell me why?
Yeah, so what makes it so attractive is that it's very easy, or at least they boast that it's really easy to create an account and to go through the application process. Another reason why it's really attractive is that depending on your financial situation, you might be finding that some of the interest rates that they're going to be, you know, giving you might be even lower than what you would get in traditional, you know, bank, with, whether it be like personal loans or credit cards. And of course, the biggest thing, because it's, you know, the social media aspect, is that, you know, when you start asking for money, and, you know, you start getting the funds, and you start seeing like your friends and families, but not just your friends and families, but strangers, you know, contributing to your cause. I mean, that could really be a great confidence builder.
That sure can. Okay, so those are definitely some positives, but there's always there's the pros, and then there's the cons to the alternative lending or financing. Just tell me a little bit more about what you think those alternative financing routes may prove to have some negatives with it.
Okay, well, I mean, if you have to compare, I mean, so I kind of talked about the benefits of the alternative financing. You can't forget about the traditional, you know, brick and mortar places, banks, credit unions. We provide personal loans, credit cards, home equity lines of credit, mortgages. So, I mean, depending on your relationship with your financial institution, you might want to just stick with the traditional route. But I think, especially where I come from, I'm in the front line. I work with people all the time. I think the bread and butter for people at those brick and mortar places is the customer service.
Of course.
Right? You know, so, I mean, you don't want to go to a place, you know, they serve really expensive food, but then the service is horrible. You know, you don't want to go over there, or go to a really cheap place, but it's like, oh man, these people are like really make you feel at home. You want to go over there. So it really comes down to me, the customer service.
Well, I don't think you can beat the customer service. I think that there are great possibilities for alternative funding, but you really can't beat
You can.
Going to a brick and mortar, like you said, and talking to somebody and getting to know. And if you want to talk to somebody and get to know more about some of your options, all you have to do is go down to one of the Hawaii USA Federal Credit Unions and talk to Rod.
Yeah, here
Rod,
at the Ever Branch.
Appreciate it, man. Thank you so much.
Thank you so much, John.
All right, we're going to have much more on Living It Away when we return.